Adrian, we spoke a few days back, and you, of course, alluded to the fact that the macro risk right now is primary. What's the sense about how much more downside can the market see from here? Or this is something that you kind of penciled in, given the initial rally that we saw at the start of the year?
Well, for Laura, simply what Shank is saying, look, this is not a story about India. This is a story about global risk premiums rising. The trigger points which undermined initially the fundamentals was a poor U.S. payroll number. Then we had elections in Europe, in particular an inconclusive election in Greece, which got investors thinking once more about the possibility of Greece leaving the euro and the potential contagion to Spain and Italy. We then had poor Chinese economic data, which particularly I'd highlight how poor electricity growth was in China. And so these have all eroded confidence. And the problem with the European story is, at best, what happens with Europe is this goes back onto the back burner again and goes out of the headlines. But it's not a situation that gets immediate resolution. If I look specifically at the Greek situation, possibly we could have a Greek election by the 10th of June, probably more likely by the 17th of June. The participation ratio in the election was only 65% in Greece. I think it is possible that those 35% that didn't vote may be more centrist, and we could actually see the Greek election generating a more favorable outcome, some less speculation on Greece's departure from the euro, and that would be good news. But between now and then, there's very little guidance on the subject, and so you get investors sitting on their hands and markets moving lower. But again, this is not an India issue. I mean, India, if anything, has been performing very much in line with other emerging markets, and so what you're going to just have to do is focus on the external story for now. There are some bullish things out there. The oil price is coming down. Commodity prices are coming down. If you look at the global agricultural indices, that looks as if it's breaking down into a lower level. So the outlook for inflation is very favorable. The outlook for India's current account deficit is also favorable, and the fiscal position is also favorable relative to current expectations. The oil price in Indian rupees is down in the last 6 weeks. So I think there are some good stories out there, but for now, I'm afraid you have to wait for the European situation to be clarified near term before you're going to see capital markets more stable. I'd also focus a lot on U.S. economic data. We've had some nice surveys in terms of business confidence. The housing market's looking better. But really what the market is absolutely focused on is the payroll data, and we have to wait until the end of the month to get that.
The question mark really is that in March and April, I'm not talking about May right now, but March and April, we haven't really seen a serious pullback of funds. Assuming that the situation in Europe doesn't shape up to be a very pretty picture, do you fear a serious risk-off? And if that happens, the resultant impact on emerging markets in general, India in particular?
It's an extremely contingent question. If I see an increase in global risk, do I think people will take risk off? Absolutely, that's what would happen. So the question is, are we in an environment that is higher risk than in 2011? In 2011, as we all painfully remember, we had bad U.S. economic data causing the first down leg, then the euro situation deteriorating with spreads in Italy and Spain moving higher, and then finally people woke up to the threats to the Chinese economy, and then you ultimately made the market lows in October. The difference this time round is inflation. A year ago, real income was being compressed by a rapid rise in inflation. The inflation data yesterday out of the U.S. shows no inflation. And we're yet to see the decline in the oil price feeding through to a decline in gasoline prices. Agricultural prices have been coming off at the wholesale level. That will help at the retail level soon. And so I think the underlying support for global growth is much better than we had a year ago. I would also highlight that a year ago, under Trichet, the ECB raised rates in April and then again in July. They did not seem to be paying attention to the potential liquidity crisis. They were fighting inflation. Under Mario Draghi, the ECB is not fighting inflation. They don't need to. They are focused on making sure that the financial system remains liquid in Europe. So I think those are big differences. A year ago in India, inflation, big problem, RBI tightening policy. We now have weak growth in India, and the RBI is responding by reducing interest rates. And broadly, we're seeing the same story around emerging markets. Yeah. My bias is to use these risk-off environments, to be adding risk myself, and to be moving against the herd.
Do you also concur with that view that India will come on tops and that we are pretty much at the turning point of this cycle? So, I mean, you already highlighted that you would be going against the herd, taking contrarian positions, but, you know, India's relative strength towards against other markets, you think that will show up even more by the time we close out the year?
Look, I think India is better placed in this environment than Brazil, Russia, because of what's going on in commodities. And, you know, clearly the China story is changing quite quickly as people wake up to some of the overhangs and excessive fixed asset investment. So within the BRICS, India does appear to have the best medium-term story. But remember, there are other markets I can buy in the emerging world. I'm pretty bullish on South Africa, on Mexico. Mexico is a major beneficiary of wage inflation in China, and also is exposed to a relatively healthy U.S. economy. I continue to like the ASEAN markets. You know, this is a big part of the world, 600 million people, and their dynamics look good. So within the BRICS, yes, I would concur on India, but remember, I've got more choice than just buying the acronym.